In the month of May, sell and go away. And if I tell you the data points in the month of May, crude at $77, US 10-year paper at 3%, numbers have been mixed, flows have been volatile, currency has plunged to a multi-month low, and Nifty is still holding on. So what's going on? I mean, if you would have gone on a long summer holiday in the month of May, and if I would have sent you a text, Jignesh, crude wise $77 per hai, bond yields at 7.7, global bond yield 3.3%. Now guess the Nifty level. You would have guessed a sub 10,000 level, but markets are at 10,700. Why are markets holding on?
Yeah. Nikunj, you're asking me, right?
That's right.
Yeah. So I think flows are pretty strong from a domestic point of view. And if you see in April, you had close to around 13,000-14,000 crores of equity flows which has come into the market. So whatever negative flows we have seen from let's say passive FII outflows has been absorbed by the domestic guys. So it's a very good sign. And you saw after Feb and March, whatever decline we saw in the indexes, I think April saw a good 6%, 6 to 6.5% rally. So I think flows are dominating the market. You are right. Macro is slightly weak with oil at 77 odd dollars, yield at 7.7, 7.65, 10-year GSEC India. Rupee also depreciating a bit. So this, I think it's more of a flow which is holding on to the markets. Also, I think one more positive thing is the earnings season. If you see the large caps, the retail private sector banks, even some of the IT companies, they all have been delivering decent numbers, I would say. So I think so to that extent, if you take the weightages of the index in some of the large stocks, I think they have delivered good numbers, and hence I think market is pretty holding on well.
All right. Jinesh, this morning we are, of course, clearly focused on what's making headlines, and it's really oil and its derivative stories which are seeing momentum. So, not surprised to see ONGC see some traction. But how are you really looking at the oil story and its impact on upstream as well as downstream companies?
See, I think it's clearly negative. If you see in the domestic market, last 20-25 days, the prices have not gone up, if I'm correct. And that might be due to the election in Karnataka. But I think already you are having an petrol and diesel prices which is almost close to the levels of highs what you saw in 2013 odd thing. So I think last 4 years of tailwind of oil at $45, $50 has now been more of an headwind. I think concerns are around government's balance sheet, how the fiscal deficit numbers will come, and if let's say oil goes beyond 80 for some reasons, I think then the pressure will be further accentuated. So I think it is better to normally we have stayed away from the commodity type of companies, and because frankly we don't know what will be the movement of the commodities because that is depending on many factors which are out of our control.
This morning, there's telecom which is in focus, and Reliance Jio, the most powerful in the telecom space, has bowled another googly. They've rolled out a postpaid plan at almost half the price with more data compared to its rivals. Are you safest staying away from the telecom space? Because this is almost turning out to be a one-player story now, and you can't really mess with the big daddy here.
So I think, as you rightly said, I think there is intense competition going on, and you are facing a lot of challenges around ARPU declining quarter after quarter. Normally, we have stayed away from that sector for a long period of time, and as of now, we are still staying away from that.
Right. Jignesh, give us your contra view in a market like this. I mean, the markets are, like Nikun said, despite confusing macro situation, trending higher. Where would you position yourself as a contra view? Because, that would just mean that a lot of stocks are already pricing in valuations at these extended levels.
So as I said, I think it is more of a flows which is deciding the flow of the market. And as I said, earnings have been pretty good, especially on the large cap side. And that is where if you see the index weightages and the companies, if you see those companies are delivering decent numbers. So it is very unlikely that markets will crack unless, let's say, the Karnataka election mandate goes terribly wrong, and some kind of an event which is out of our imagination. So we don't see markets cracking so much. However, you need to contend with that. The volatility will continue. Macro factors are looking bit weak. Micro is looking good. Earnings are okay. So I think we are in midst of a zone where, frankly, which way the markets will go, it is difficult to predict. Let's see how the Karnataka election numbers come. I think that would give some stability to the market if it is in the favor of ruling central government. So that will further accentuate in terms of momentum on a higher side. And I think from there on, again, the fundamentals come into play. Critical would be monsoon. If monsoon is good, then you will have rural India, which again is started to do well, will further do well, and that will exert some cushion to the inflationary scenario which is building up because of oil.
Jignesh, while we're all excited and enthused about this big earnings revival which is at play, that doesn't seem to be translating to some of the smaller corporate, or for that matter, the PSU banks. And two cases in point being Federal Bank and Indian Bank. The numbers came out as recently as yesterday, and we saw what happened over there. There continues to be the NPA stress, case of high provisioning. There doesn't seem to be any, yellow shoots as well emerging.
So I think after the new RBI circular which did not allow the restructuring SRA to continue, I think everyone is taking that one-time pain. I hope it's a one-time pain. Everybody is taking that pain, and we'll have to see over next 1 or 2 quarters how this pain subsides, and then only we'll really come to know how much the cleanup has happened and how much growth momentum can come back on those stories.
All right, Jignesh, we'll leave it at that. Thanks very much for taking out the time to speak with us this morning. I really appreciate your views and your thoughts on the markets.